Welcome to the Apartment Guys, where we dive deep into all things multifamily investing. Our mission is to educate, inspire, and empower real estate investors to reach their highest potential. Each week, host Tate Seamer interviews high-level guests from all over the industry who are sure to bring valuable, actionable ideas that will propel your career to the next level. Whether you're just starting out or a seasoned investor, you are in the right place. And now your host, the Apartment Guy, Tate Seamer.
Welcome, everybody, back. Another episode of the Apartment Guys podcast coming at you today. I've got a very good friend, and when I say that, I mean it. Sean Thomson is a buddy of mine, and Sean, we've known each other at least 3 years now, 3.5 years.
Something like that, yeah.
Yeah, we were in a coaching mastermind together with Corey Peterson, who is somebody that I highly recommend all of our listeners network with and get to know if you can. He's got a great mastermind right now that is worth looking into, and he's partnered with Jorge Abreu or George Abreu. I always want to call him Jorge. George Abreu and Dan Hanford in his new mastermind. I have no reason to plug it. We have no affiliation, but it's worth mentioning because we love Corey. But first of all, Sean, I'm stoked to have you on the show with me. We had to kind of tear ourselves away from our conversation before the recording to start recording because we've got so much to talk about.
Yeah, it's been a while since I talked to you, and I always love talking to you, getting caught up. So yeah, we have to do the podcast.
That's right.
Can't just chat all day.
Focus on the podcast here.
Right.
So, and yeah, listeners, I think you're going to get a lot of value out of this because Sean is somebody that, a lot like us, was at square one when we met 3.5 years ago, and has since done deals and is doing deals and underwriting deals. And we'll talk about some of the specifics there. But this is, I love having people on the show at different points in their career. We just had Josh Darville on the show, who hasn't done his first deal yet, and has done an awful lot of work to get to the point of being ready to do his first deal, and is ready. So, that episode was all about kind of doing a little bit of coaching with him to kind of get him to the next level, to get him past that first deal hump, the law of the first deal. Sean's somebody that, like me, I consider you a peer, Sean. Like we've progressed together and have done deals at similar times, and you're actually a limited partner, passive investor in one of our deals, and for that I thank you tons. And yeah, so I'm really stoked to dig in here and talk about all the stuff we can talk about to add value to listeners. But first, Sean, give us a little background on you, and especially in the real estate world, kind of, or professional world, where you started and then how you got into real estate, and kind of go from there.
Yeah, sure. So I guess the short version, I have a really long version of this story, and you have to watch me because I'll just talk a lot. But so I've always worked my whole life. I've just worked in the cycling business, and I always thought if you work hard, that's how you get ahead. That's what I was taught, and that's not necessarily true. It's you got to make good decisions. You got to make good investments. You got to do other things, right, to get your financial position in a different place than what you can get with just working. So yeah. I always thought real estate was a great path for me, but I never really kind of knew how to do it as a profession or as a business. And a few years ago, I was in between my jobs, and I thought to myself, that's it. I'm not getting another job. I'm going to make this work somehow. And I finally decided just to go to buy a house. And I just thought, well, I know how to buy houses. I'll figure this out. Right. And buying a house and fixing it up and selling it for a profit is not hard to do. Pretty much anybody can do that with one house. That's not hard. To do that every day as a business is more complicated. And I didn't know how to do that. But the first house I bought with the intention of flipping it, my contractor had just bought a HomeVestors franchise, which is, I don't know if everybody knows that, but it's just a system for buying homes in a business, right? It was a franchise business. So I went down and bought a franchise, and they essentially taught me how to make this into a business. So that was kind of my start to being a real estate investor. Mm-hmm. And from there, my goal has always been income. I want monthly income. So I tried to accumulate as many rentals as I could possibly get and go through that process. But it was very slow. I wasn't really hitting my income goals, my monthly income goals, one door at a time. And I thought to myself, there's got to be a better way to do this. And I'd always thought to myself, I would, if, when you're driving down the highway, you see those apartment buildings, and I would see one of those and I would think, man, if I could just have one of those, that would solve all my problems. Right. That's of course not true. Right. It doesn't quite work that easily. But so I started thinking, well, I wonder if one of apartments was a thing. And I, just like you said, I met Corey Peterson, and I always thought apartments were for REITs and hedge funds and big money guys, finance guys. I didn't know a regular guy like you or me could do that. And I met Corey Peterson, heard his story, and I thought, man, this is what I want to do. Right. So that was 3 years ago when you and I met, when that was all kind of transitioning in my business. And fast forward to today, we've spent the last couple of years transitioning my business out of single family into multifamily. We made our first acquisition as a lead team here in Dallas area. We bought 76 units. It's roughly an $8 million property. And that was our first major multifamily deal. Since then, we've been trying to get operations going on that property and getting that smoothed out and things. We've had to change management companies, and we've gone through a few challenges with that property. But it's still doing really well. We're still very excited about it. And then we've been focused mostly on getting our next deal, right? So that's kind of the process. And what I realized, in those 2 years I was building my business, I focused on deal finding. So that was kind of my focus. And I had neglected capital raising. Mm-hmm. And so the last several months, I've been focused more on capital raising and finding capital partners than I have been on finding deals. So I think now we're very close to having very high level capital partners on the equity side, and we're very close to getting our next deal. But we essentially went from $8 million properties that we're looking at to now we're looking at 20, 30, $40 million properties. Yep. Because of the partners we were able to bring in, right, and the capacity we can do now. So we continue to level up what we're trying to accomplish.
So you really honed in on the capital side of things after you became a deal finding machine. That sounds really familiar. Like, I can totally relate to that. And it's an interesting thing that happens. The textbook way in a lot of people's eyes to do this business is to find the money first and have capital ready to go, so that when you find deals, you're good and you have the money and you can do the deal. The reality is, I don't know if it's everybody's reality, but I think you and I came from a very similar place with the single family stuff. We did single family for 10 years roughly. And first of all, I couldn't agree with you more about everything, all the negatives you said about single family flipping and how much better a business this is to be in, and how these assets are fundamentally exponentially different than a single family asset. But coming from the single family world, what you're used to doing in single family is tying the property up, getting it under contract, going out, getting a hard money loan or a private money loan or something like that, buying it, doing the improvements and selling it, right? Like that, very, very basic. But the model that we took from single family into multifamily was to go deal first, get the deal first, get it under contract, because you want control. And in my eyes, you want control of the deal before you start spending a lot of time, money, and effort on due diligence, getting the capital together, getting the loan together, et cetera. That's always been our philosophy. And you and I are resourceful enough. We know enough people that we could do a deal or two or three deals through maybe friends and family networks and stuff like that. But when you start looking at scaling, right? Like adding to your portfolio and doing bigger deals and doing more deals, you need to either be raising capital on on an ongoing basis with an investor pool that's yours, that you email to, that you market to, or you need to be establishing relationships with larger sources of capital, which is what you've done, both of these things. And so have we. The larger sources of capital, tell me if you've had a different experience, Sean, but what I've found is that they don't want to write checks for less than $5 million usually.
Right.
Is that what you found too?
It depends on who you're talking to, but yeah, most of the time, if you're talking to a large capital provider, they're looking at $5 to $20 million deal or per deal checks is what they want to write.
Right. So we've gone out as we've gotten our deals and put them under contract. When you get these deals, you start exploring all different kinds of capital. And so you start relationships that maybe don't necessarily work out for that particular deal that you're working on. But, we've got multiple family office type sources of capital that have said to us, when you have equity that you need, 10 million or more on 5, 10, 20 million, like you said, we're real interested in working with you. So, a lot of our deals, our equity raises have been 2 million, 1 million, 3 million type equity raises. And you're not going to get institutional capital to invest in those deals. So what I heard you say, Sean, is that your strategy has changed and as far as criteria goes, and you're now shopping much larger deals than you were before.
Yeah. So what happened with me was I did the first deal. We survived the equity raise or the capital raise on that one. And I realized I've got this massive deal machine. I can get into best and finals, or I can get really close to opportunities in the deal process pretty much at will. And in the most competitive market in the country, right? So I'm in Dallas. We haven't underwritten, like 90% of our underwriting is in the city, in the metro area of Dallas this year. So the first quarter, we underwrote, over 50 deals, and 90% of those were here.
Mm-hmm.
And so we're in a very competitive marketplace, and we're able to get very far in the process, right?
Yeah.
And it's a very competitive process.
Yeah.
So we think we have the capacity to do deals here if our capital stack is set right. Yep. So what we decide, or what I figured out, was it doesn't matter how good I am at finding deals, which we're really good at, I think, if I can't pay for them, right? Someone has to buy these things and pay and fund them, right? And I don't have 20, 30, $40 million that in my checking account, right, that I can write checks for, right?
Not yet.
And the whole point of doing this business is not to be able to do that, right? The whole point is to go out, really, like you were saying, from the single family business, I would look at an asset as what can it do for me? And then how much can I pay my investors, as a mortgage or something like that. The way I look at what we do now is I'm providing an investment vehicle to either an individual investor like myself in your deal, mm-hmm. or to an institutional level person like a family office, like you said, and I'm trying to help make them money, right?
Yep.
And if I can make them money, then it helps me make money.
Yep.
And so I look at my business now as more of providing opportunities, investment opportunities to someone that we can both win, right? Mm-hmm. And so taking a different approach to thinking of it that way, and then going out and finding those sources of capital that are, I tell people this all the time. I'm not looking for money. I'm mm-hmm. surrounded by money. I have money everywhere in my life. All my friends, they all have money. Money's not my problem. My problem is finding people that are interested in what we're doing, that believe in what we're doing, yep. and that want to come along on the journey with us, right? And then let me help them make more money out of their capital that they have, whether that's 50,000 or 50 million, right?
Yeah.
And so for us, we look at what relationships can we foster with anybody that's interested in what we're doing. And it's more about having that relationship with someone that knows us, that likes us, and that trusts us. And we feel the same about them, mm-hmm. and we can do business with them. And so we've shifted our business philosophy to stop looking at what we do as buying a property, right? I do buy properties, but that property is essentially just a business that we're trying to buy that is a vehicle that makes money for our investors.
It's a business in a box. It just happens to have place for people to live in. Yeah.
Right. So in the last 6 months, I've kind of had, maybe last year or so, I've kind of had, as I was going through this first deal process and getting to the second deal process, I kind of had a mindset shift, mm-hmm. in that I always thought of myself as an operator, and I still do think of myself as an operator. I love to operate communities and build communities that families feel great living in. So I think of myself that way, but I also think of myself now as a person that provides investment opportunities to other people that may not have these investment opportunities available to them. Mm-hmm. A guy who has $100,000 in the stock market and is scared of the volatility in the stock market and wants something more stable, and they want to be a real estate investor, their option is to go buy a single family rental and manage it themselves and handle all that stuff themselves, or find someone like you or me that they can give the money to and be completely passive. They don't have to deal with toilets and, tenants like everybody says.
Yeah.
And they can still make money. They can still get the benefits of depreciation. They can still get the benefits of, accelerated appreciation, cash flow, all those things. They can get the benefits of a real estate investor by being a passive investor. And
hedge against inflation. That's a big one.
Yeah, it's an inflation hedge. I mean, all those things that we love about. I mean, I love real estate because of all those things.
Yeah.
There's people out there that love that same thing, but they've got their money in a 401k with some random asset manager, and they don't know what it's, it's in mutual funds or something like that. And there's a lot of people I talk to that want to get that money out of those guys' hands and into something that they can feel, that they can touch, that they can believe in.
Yeah.
And I think that's what we do. So I've kind of changed the way I look at my business a little bit.
Yeah. So listeners, I think there's a lot of takeaways here. And one of them is just listening to the way Sean talks and uses language to define what he's doing. Like, seriously, he's laughing right now. If you can't see him, he's laughing, but I'm being serious. You are intentional in the way that you talk about your business and yourself and your mindset shift. And the reason why you are now swimming in with the big sharks and looking at big deals with big investors is primarily because you decided to, and you can and believe you can and have enough confidence in your natural abilities and everything else to be able to do what needs to be done in that space. And so to me, again, it just points back to this, the importance of mindset and knowing what you're doing. Like you also have a very clear idea of like, this is what we're doing and this is why we're doing it. Right. Yeah. And you sold me. I mean, when we talked about business in the box and the advantages and, and we always talk about passive investors have the best position in these deals. They get paid first after debt service. Right. They get paid the most. They're very well protected. They're, as far as risk mitigation goes, and they get tax advantages and depreciation, and they don't have to do anything other than provide the capital. So what are your thoughts on all that? I know I just said a lot.
Well, I was going to say that I know what I said sounds, you just said I have confidence, but honestly, Tate, I swim in fear all the time. So what I do in my life is we're doing big, we're doing big things in our life. And like you said, going after these big deals. And I'm literally, so my wife works with me. My daughter is my partner. My whole family, that's my entire family, is the three of us.
Yeah.
I have a small little family.
Yeah.
And so we all work in this business. Every penny I have, every moment I have, and every person I have is invested in this business, investing in making this successful. And we're not invested in just doing this business. We're invested in winning this business, right? So we don't have any choice but to get out there and hustle and win. We are really motivated to make this a success. Mm-hmm. And so I risk my family's future every time I do one of these big deals. I mean, to do a $30 million deal, I laugh at people that say to me, well, you need to have skin in the game. And I laugh because it's like, man, I don't know what else I can put in.
Right.
I literally have everything in this game. Right.
Yeah.
And so I live in that fear all the time. But for me, sometimes it's a struggle to overcome. Mm-hmm. But I work really hard to move towards the fear, move into the fear and keep moving forward. But if you're trying to do something big, like you are, and like we are, you're going to feel, there's days where I'm just like, I don't think I'm built for this. I literally don't know how I can make this work. Right.
Yeah.
And you just got to sleep and wake up the next day and hopefully tomorrow you're better. Right.
Yeah. But also, Sean, I think, it's important to give yourself some credit in terms of, you do a lot of work on yourself. I know that. And whether it's personal development work or professional entrepreneurial work, networking, conferences, you go to more sites than anybody I know. You travel more than anyone I know. You are constantly walking properties. I mean, you are constantly putting one foot in front of the other. And I get it. I get the fear thing. And it's not courage if there's not fear present first, right? Like it's, to act courageously, you're acting in the face of fear, in spite of fear. And So it's a natural response, and we're wired to be fearful and to have our survival instincts, and to have mastery over those is I think really where it's at. And one of the things that's always fascinated me about you is your interest in Stoicism.
Yeah.
Quite frankly, I love that. I love what I haven't studied it a whole lot, but what I have just really resonates. And could you, just for the listeners, maybe a little sidebar here, kind of just in a nutshell, describe what Stoicism is?
Well, I don't know. I'm not a Stoic authority necessarily. I use it in my life in terms of, some things that they do in Stoicism that are beneficial to me. But, there's all kinds of ancient philosophies that have benefits to what you have going on. If you look at like the 7 highly effective habits of highly effective people, or whatever that title is, or any of those books, they're rooted in ancient philosophies of overcoming adversity, right? Anytime you're trying to take big leaps in your life or do big things, and we're essentially leveling up our generational families, right? So my grandkids, if I get this right, my grandkids are going to live a much different life than I ever had an opportunity to live, right? And when you're trying to make a move in your life that dramatic and that big, you have to get in touch with those essential elements in existence, right? In who you are and what you're trying to achieve, so that you can survive it, right? Some people just have it innately. They can just charge into difficult situations and be fully confident, and they just, they're just okay with whatever outcome comes up, and those people are amazing, but I'm not one of those people. I struggle to be, to get through my fears and things like that. But in Stoicism, there's, how to overcome and deal with your fears, and, how to kind of have a perspective on life that, we're all going to die eventually. And, this, you got to seize the moment. You got to seize this day you have today. Right. And it's just kind of those philosophies of success that are rooted in this ancient philosophy. And it's the things you see in all the self-help books are, essentially from some sort of ancient philosophy out there somewhere. But Stoicism is a really good one. And I think Tim Ferriss actually calls it like an operating system for high impact, impact lifestyles, right? So if you're trying to have a big business or run a big business or create something big, Stoicism is a great way to kind of have a leveling system for your life, right?
Yeah. And I'm actually looking at a definition of Stoicism. It piqued my curiosity here, but it basically teaches that virtue, which is the highest good, is based on knowledge, and the wise live in harmony with divine reason, which is also identified with fate or providence that governs nature, and are indifferent to the vicissitudes of fortune and to pleasure and pain. And I like that. It's for me, it's kind of like you don't let the lows get you too low. You don't let the highs get you too high. Right. And also, like, it kind of reminds me a little bit about the 4 agreements. We're really, one of the 4 agreements is to always do your best. And to me, that also is inherent in that is really focusing and only worrying about what you have control over.
Right. That's the essence of it. Right.
Yeah. So, staying in your lane and your sphere of power and control, and not concerning yourself too much else with whatever else is happening. And so anyway, when I think of you, Sean, I always think of Stoicism. And
yeah, well, I use a lot of it. I don't know that I'm an expert in it, but I use a lot of it. And the control, that question comes up for me a lot. Mm-hmm. It's something I use in my life all the time. I'll ask myself, do I control this?
Yeah.
And if the answer is no, then I stop worrying about it. Yeah. I try and focus on what I can control in those situations. And if the answer is yes, I do control this, then I figure out what outcome am I looking for, and then I fix it. Right. I take control of it, and I make the outcome that I want.
Yeah.
But most of the time, you and I both, we're negotiating these deals, and we're trying to control an outcome that we just don't control.
That's right.
I mean, there's so many elements in putting a deal together. There's 1,000 different things that can go wrong or right. And I don't control any of them, right? And trying to worry about them and make them bend to your will is impossible if you have no control over them. So I have to ask myself that question all the time to recenter my expectations on what I'm trying to do. And the other thing is, there's a saying, it's called amor fati, which is just love of fate, right? So it's just love of fate. And it's an acceptance. It's not just an acceptance of outcome. It's an appreciation of the outcome that you get and learning from it, right? So even a bad outcome has a good effect if you learn from it and you take those lessons and go to the next phase, right?
Yeah.
So whatever it is, even the loss of a loved one can be, you can look at it from a perspective of I'm going to miss this person and I'm that I cherish for so long. Or you can look at it from the perspective of, I'm really glad I had this time with that person. And I'm really glad I loved, that person or learned from that person or whatever it is in your life. So it's a matter of kind of getting that perspective on how you want to look at what's going on in your existence, right? In your life and how to kind of propel you forward in a successful manner, not in a negative manner.
I have a question for you, and we'll move on from the philosophy and spirituality here. But do you meditate? Do you have any kind of spiritual practice like that?
It is a struggle for me to meditate. My brain, I can't sleep very good either. So for me, stillness is a difficult thing. Mm-hmm. I get a lot of I call it meditation, but it's not. But on my bike ride, so on my bike ride, I kind of flush through some of those things.
Cool.
And then I do a breathing technique. I kind of use that as a meditation time period, but I'm focused on my breathing. Mm-hmm. And then I try to do a stillness every once in a while when I'm feeling extra stressed. So I do try to do a meditation. I call it meditating, but I'm pretty confident that if you asked anybody that hasn't that knows anything about it, it wouldn't be classified as meditation. But it's just a stillness. I try to incorporate a stillness in my life somewhere, even if you just sit and stare at the ground for 10 minutes and try to not think of anything that's going on. I think that's good, but I do some of that, but not very well. My brain is just too much noise.
Cool. I get that. All right. Well, speaking of things we can't control, obviously what's going on in the market right now, especially in the debt market, is changing things for us. And for you and me and investors that are doing deals like us. And I think it's good to talk about because you've been particularly impacted by this recently in an interesting way. And I'd like to talk about it for a second. But, as of this recording, which is April 13th of 2022, interest rates in the last month have gone up by over a point, I think, roughly in the commercial multifamily space. Is that your understanding, Sean, about that?
Well, they've been hedging up slightly over the last month. The last 2 weeks really have been a dramatic change.
Yeah,
in all kinds of areas.
Right, and it's not just interest rates; it's LTVs, leverage, amount of leverage that lenders are willing to do. I think in some ways we're starting to see, or we're seeing a little bit like what we saw right at the beginning of COVID, where lenders freaked out and all of a sudden all the loans were gone, and then all of a sudden they were back. And I don't know if we're going to see that with in this situation or not. Certainly, as far as interest rates goes, that's up largely to the Fed, obviously, and nobody has any control over that. So it's our job as successful entrepreneurs pivot when necessary, and we are pivoting, and I'm sure you're pivoting too. And underwriting deals right now is a lot different than it was a month ago, right? Because you're having to try to guess at what your interest rate's going to be on a deal, and in a pretty rapidly changing environment. So what's your perspective on all this? What are you seeing? What are your thoughts on it? And what are you doing to pivot?
Well, so I don't know how deep you want me to go into this, but there's a few factors at play. So the Fed is selling off their balance sheet, right? So they have $9 trillion in the bond market that they're trying to downsize their balance sheet by 2 to 3 trillion rapidly right now. So the change in the 10-year is really kind of what's affecting the rates more than the Fed base rates, right? So those are changing as well, and everything's heading north, which is bad for us, right? So lower interest rates means lower monthly payments, which means better cash flow on our properties, which means we can pay more for deals, right? Yep. In your underwriting. And when interest rates go up, that's bad. But even in underwriting, you have a hedge of half a point. It's no problem. If you're in the middle of a deal, you can do you can still make a deal work if your interest rate bumps a half a point or something like that. But what's happened is, and what we experienced, we were just putting together a giant deal, a $30 million deal. And in the 2 weeks from the time that I was discussing this with lenders and equity and everybody, that they were just like, let's go, let's go, let's go. 2 weeks later, when I'm trying to get my PSA signed, everybody was hitting the brakes. And they were my loan to value, loan to cost went down, significantly. My interest rates went up. The cap rate locks on bridge went like triple.
Yeah, way up.
They went from 200,000 to 600,000. We were getting estimates almost, like in $700,000 for a cap rate lock on this deal. And it's like, man, and then what also happened was you could feel the debt lenders just say, hey, we'll give you money, but we're going to hedge our bets a little bit. Right.
Right.
And these are floating rate terms too. Right. So you could eventually end up paying 6.5% on a loan that you expected to pay 4.5%. Right. Down the road,
which kills your cash flow
2 to 3 times. Yeah. So you're suffering. Your operation is going to suffer if the rates continue to go that way.
Yeah.
And so what we also saw was the equity that we were dealing with. These are high finance people. These aren't $100,000 investors. These are multi-million-dollar investors, right? So they're very tuned into the markets and what's happening, and they're underwriting, tons of deals every day. So they're seeing these trends happening in real time. And our equity started to say, hey, we'll give you the money, but we want more rate. We want more upfront. We want more. We just want more, right?
Right.
We want more of the deal. We want more of this. We want more cash flow. We want more. So what ended up happening to our deal is that everybody wanted more, and it got to a place where I couldn't deliver it. Right. The deal couldn't deliver. It wasn't me. It was the deal.
Sure.
The deal that I had put on the table was just unworkable because of everybody was coming to me and saying, hey, we need more from you the interest rate. We need more from you on the SOFR caps. We need, all these different things. And so I ended up not moving forward on the deal. I didn't see the future going in my direction. Right. I started getting squeezed so badly that I thought that I don't think this is possible. And so we walked away from that deal. Luckily we weren't already under contract. I would have lost, several $100,000 if I had been under contract and had to walk away from that deal, which would have been really painful. And I still probably would have had to do because the shifts were in the millions. Yeah. It wasn't like a couple $100,000 shift. Yeah. I think we were looking at, if we had to do a retrade, it would have been north of $1.5 million probably to retrade that deal and make it work again. Right. So it was that dramatic of a change.
Yeah.
And what I did after that deal ended, I contact, I have lenders reach out to me every day, how's it going? Do you need any money? They're still trying to place that capital. And what I started asking them was, what are you suggesting we underwrite to? And so I've been getting sort of their feedback on what our underwriting standards are, so now we're where we were at 3.5 underwriting, 3.75 on deals. We're now at 4.25, 4.5, even in some cases, so for caps.
For agency debt?
No, this is for bridge.
Floating rate bridge debt, right?
Yeah. Bridge.
Right.
Bridge generally has great rates, and we were at 3.5 2 weeks ago, 3.5. Yeah. Everybody's like, oh yeah, 3.5 is excellent. Well, and they've added a point, and a point on the bottom line like that. It's hard to do. And so I've been trying to gather data from people that are in the know, that kind of see the trends that are happening, and that are kind of, they're the ones that are offering the debt, right? So they should know kind of what to underwrite to. And it's dramatically different. And then I've been just having those discussions with my equity to say, hey, what are you guys going to expect from now on? And we're having to incorporate those things into our underwriting. But the biggest problem that I see is these sellers, they bought these deals and they've been in such a fortunate market where cap rates are compressing,
right?
Rents are skyrocketing, and they're counting their it's like heyday for them. They struck gold. If you bought a deal 3 years ago, it would be like hitting a vein of gold back in the 49ers days, right?
Yep.
We went out to all of our lenders and our equity partners and said, okay, what is your expectation in our underwriting? And we started to incorporate those things.
Yeah.
And what we found, we looked at some of the deals that we just underwritten before. And what we found was that we're coming in at 5 million below, or, much less than what we would have been before. So we looked at a $43 million they were asking $43 million on a deal, and we're coming in at 36, right? So
Mhm.
You know, and it's a dramatic shift in what the pricing expectation is from those sellers that are trying to put their properties out to market. And those people are going to have to ask themselves, do I keep the property or do I accept the lower price? And I think that seller side expectation is going to have to adjust to the new capital stack demands.
Yep.
And I think that's going to take a few months. I mean, it's, you
Yep.
know, the sellers are going to have to realize, hey, I'm either just not going to get as much money as I expected, or I'm going to wait and sell this property. And then everybody's going to have to balance out. And I think right now, like the next 2 months, this is just my opinion, honestly. I don't have any real additional insight other than what I do every day, but I think the next couple months is going to be a balancing of seller expectations and then, capital requirements, right? So until that kind of balances out, I don't know how people are going to transact right now.
Yeah. So volume could go down in terms of number of transactions over the next few months is what I hear you saying. I had the same thought before this adjustment happens. You know,
I think volumes have been up dramatically. We've had no problem finding deals. Finding deals at work, that's a different story, but finding deal flow is there. There's tons of people wanting to sell properties right now. I think a lot of people were trying to beat this curve in the first quarter, and some of them didn't make it. Right. I think there was a flood of properties in Q1. So now in the rest of this year is just going to be balancing out what the expectations are. And I don't know, I guess people are going to have to judge whether we sell now or wait next year, all those things. But I think there's going to be a couple months of balancing, whether that means that rates get more in line with what we could do, or prices, seller expectation on price comes down, or whatever kind of balance that is. I think the volume will pick up again once everybody kind of figures out where they want to be. I think the volume may not be the biggest issue. I think it's just a matter of everybody kind of figuring out what each side can accomplish.
Let me, before we zoom back out from your deal, I just want to ask you on specifics. How much did the LTV change between those 2 weeks?
Well, we were on LTC, so it was LTC. So they dropped 5%, but they also kicked some of my fees out in the sources and uses. So it got to where, because I was having to bolt in fees from my equity side too, right? So I was struggling on both sides.
Yeah. And
the expectations were changing minute by minute. And so the drop in the LTC was a huge shift. If you take $1.5 million from one side and drop it on the other side, where the return expectation is
much higher,
way different,
yes,
then it completely kills your cash flow. Your deal the upside is gone.
What did you see in the way of interest rate change as far as what they were quoting you?
Yeah, the interest rate wasn't the biggest issue. We could have survived an interest rate change. It was like a half a point. Yeah, it wasn't. That wasn't the issue. Really, there was no one issue.
It was all of them together.
The LTC was a big problem.
Yeah,
but I almost could have overcome any one of the issues that popped up, but we had like 4 or 5.
Yeah,
that all added up to be horrible, right?
Yeah, right.
One or two of those problems, I might have still been able to make the deal work. And I think it was a beautiful property, everything we had going for us, and I really wanted it to work. But it was all 5 of those problems. Just like at the same time, it doesn't work anymore.
Yeah, yeah. And you did the smart thing. You walked away, and I know it's hard to do that. We get invested in these deals energetically and financially, and put a lot of time into them, and it's disappointing when they don't work out. We've had that happen. We backed out on a deal in Albuquerque that we were supposed to close right as COVID hit, and the lending was all of a sudden up in the air, and we had to back out. And we had $30,000 roughly in due diligence costs into that deal, and travel and everything else. So it's a reality. It's part of doing these larger scale assets, and it's investing, and there's no guarantees. And so things can shift, unexpected things happen, like a pandemic. Nobody saw that coming. And then another unexpected thing happens, which is we have the best year ever in multifamily and single family and everything else after the pandemic hits. Like, it's just very unpredictable right now. We've got a war, and we've got, lots of factors that can contribute to what's happening here. So that said, I want to emphasize that the supply and demand factor of housing in this country is not going anywhere. That's going to be a driving massive factor moving forward. That's going to keep things. It's going to certainly keep rents at least level at very worst. I think it's going to keep housing prices level, if not continuing to increase, because I mean, my brother just sold his house in Cincinnati. He had 30 showings in one day, 13 offers. They accepted an offer for $50,000 over asking price in the suburbs of Cincinnati, which isn't that hot of a market. Like, it's real. And that was a week ago. That was during this interest rate thing. So like, supply and demand is really the driving factor in all of this. That's, I think, going to keep things healthy for us. And as long as we're doing as good a job as we can, doing the best deals we can, I think we're going to be all right.
Yeah, most of what I'm talking about is just capital market manipulation, right? So these guys, they're hedging their bets and things like that. And our job really is to find those properties that we can model, that using that capital to be successful, right?
Yeah.
And like you said, fundamentally, the reason I love real estate, no matter what the capital markets are doing, it doesn't matter to me, 6%, whatever, it doesn't matter.
Yeah.
We just underwrite it as it is.
Right.
The reason I love real estate is fundamentally shelter is something all of us need.
Yeah.
And in this country, there's what is it, 4 million shortage of homes right now
units,
for people.
Yeah. At least. Yeah. It's
yeah.
huge.
So it's, if you just look at the basic, I mean, that's economics 101 that you learned in high school. That's like the first thing they tell you about economics is, if supply and demand aren't lined up, the prices go this way or that way, right? It's just how it works.
That's right.
And in real estate, for sure, the supply for shelter is way below the demand. It just, there's so many people that need housing, and the population is just continuing to grow. Not every town is seeing that, but the planet's definitely seeing that for sure. And certain areas, like, I live in Dallas, and there's no end of population growth in sight for this town. It's just amazing. So,
Salt Lake's the same way. Austin's the same way. Florida's the same way. Southeast, Charlotte, et cetera, et cetera. If it's cool with you, let's go back to our roots here a second. Let's mastermind for a minute, informally. What do you want us, have happen with Thomson Multifamily Group here in the next, say the remainder of 2022, now that things have changed a bit? Do you guys have a goal or goals for the year? Or what do you have in your sights?
Yeah, we have tons of goals.
Yeah.
So what we're doing right now is I'm looking for substantial and significant, like high level equity partners. So we're constantly looking for that. I'm looking for someone that, like I said before, that believes in what we're trying to do, that wants to come along with us and be part of that. So I'm still out meeting those people and getting in front of those people. I'm looking for someone that I can have a real relationship with, not just, throw deals at and they give me whatever. But so I'm looking for that. And that's kind of step one for us. We're obviously looking for deals all the time. That's kind of, we're always in that process. That process around here just never ends. It's like a machine. So that's constantly happening. And then we're starting a new company. Actually, we think we do a fairly good job of asset management on our side. We're not great asset managers, but we think we're good. And we think we do, we're better than most, I would think, for our industry. And so I kind of see a need there for syndicators like you or me that just can't, find the time to do asset management on a next level.
Yeah.
Because we're busy finding deals. So I have 3 partners that have substantial property management and asset management backgrounds, and they're phenomenal. And so we decided they wanted to start a company. I wanted to start a business as well. We decided to partner up together, and we're starting an asset management business for syndicators that are kind of in our space.
Yeah.
So that's a big project that we have undergoing. We just, I just dropped a check off at the, it felt fantastic the other day. I dropped a check off at the attorney's office to kind of get the ball rolling on the LLCs and all that stuff. And naming the new business. It's kind of like you're birthing a new business, Cool. And I had a lot of fun doing that. It's funny giving money away. It's sometimes it's fun, I guess, but not all the time.
Well, you're investing in yourself. You know, that you're going to 10X that.
Well, and I'm excited about the people I'm doing business with. Honestly, they bring so much to my world, just as people in my environment, right? They have so much experience in this business. They have so much, high level understanding of how this business operates. They're truly next level people. And so I'm just excited to be in business with them, whether we're successful or not. I know we're going to be successful. That's not really the question, but whether we're successful or not, I'm less worried about that. I'm so excited just to have them around me. So, for me, that's awesome.
Yeah. It's exciting.
And we're kind of doing that, but and then we're just going to continue to build this. My daughter's my partner. I'm building a business that, I'm not trying to get into deals. I think a lot of people in this business, they're just trying to get into deals. And that's not my philosophy at all. I'm trying to find good investment vehicles that we can make money with our investors, but I'm also trying to build a business that my daughter can then take and grow with whatever size she wants to make it. Right. So cool. I'm trying to lay the groundwork for a successful, apartment asset ownership, whatever you want to call this business, business for her. So yeah,
that's awesome.
That's what we're doing every day.
I know Abigail, your daughter, and she's sharp as a tack and motivated and cheerful and positive. And I think I'm glad that I know her now, because when she's majorly successful and you are majorly successful, hopefully we will have been a part of that. Yeah.
So I really hit the kid mega lotto. I think I hit if there were a child mega lotto, I think I hit that one. She's pretty awesome.
She is awesome. Yeah. And so is Diana, your wife.
Yeah.
Fantastic team. And I love the family dynamic. You guys, you're the only family team I know. And I think it's awesome that you guys are all in it together, and you're the captain of the ship, and I love it. Well, Sean, first of all, how can listeners reach you? How can they reach out to you and maybe schedule a call to talk to you a little bit, or if they're interested in investing or anything like that, how could they reach you?
Yeah, we have the website's probably the best place to go. And that's ThomsonMultifamilyGroup.com. And my last name's spelled a little differently. It's THOMSON. There's no P in the middle. I don't know if you can see it back behind me.
Yes.
But it's Thomson Multifamily Group.
You can see it. Yep.
Yeah. ThomsonMultifamilyGroup.com. And you can find, you can apply there we have some resources like informational resources, educational resources. You can get that. You can apply for our newsletter there if you just want to kind of get information about who we are every month or what we have going on. You can schedule an investor call with us there. You can catch our podcast there. We have blogs that we try to provide that are, educational tools for people. I think you might even be able to schedule a 15-minute phone call with me on there. I don't know if we're still doing that. I kind of got inundated for a while there. So I told Abby to turn that off, but you can still reach out to me there through the website. But that's probably the best single place to go to get involved with us.
Hey, did you shoot the drone footage on your website? On the
new website? No,
the drone shot.
No,
it's cool. It's really cool.
I don't know. Abigail does our web stuff, so I don't know where she found that. But
she did a good job. Yeah, everybody, listeners, check out Sean's website, ThomsonMultifamilyGroup.com, and THOMSON, not with no P in there. So yeah. And then any final words of wisdom I know you're going to have something good for us here, but final words of wisdom for our listeners today?
I always talk about believing in yourself, right? So I think just believing in yourself. If you have big dreams, and I have this behind me too. So this is kind of my success formula. You have to dream it to I think everybody starts with a dream. You have to believe that you can do it. You need to get out there and learn how to do it, plan your course of action, and then go do it. Right. So yeah. I think the first hurdle for almost everybody is belief. You have to believe that you can do it. And I think if you can get over that first hurdle, the rest of it is just getting out there and hustling. So,
yeah,
and that belief, it's a constant thing you have to go through. And at least for me, right. So I'm always having to reassure myself that I'm smart enough, strong enough, fast enough. I can do this. Right.
Yep.
So I think if people can get out there and believe in what they want to accomplish, their dreams, that is, I think they can do it.
Yeah. So dream it, believe it, learn it, plan it, and do it. I love that formula. I think the dream step is key too. I think sometimes people don't allow themselves to dream big enough. I think we all have dreams if life were to be this way, but sometimes we don't really indulge in our dreams or develop them or like visualize them necessarily as much as we could. I know I could think bigger all the time. So
yeah, I think all of us have a dream. Everybody has a dream. I think people get into a life that they maybe sometimes forget about their dream. They just kind of put it aside, right? And I think that's what I'm saying, that if you believe that it's possible, your dreams can become a lifestyle. They don't have to be dreams anymore.
Yeah.
So if you can take your dream and believe in yourself enough to start taking the actions that you need to take, you can make your dreams a life, not just a dream. And then what'll happen is, especially with me, I mean, 3 years ago, I was buying $80,000 houses, and now I'm trying to buy $30-40 million properties, right?
Mm-hmm.
And so, it's just a matter of believing that you can do it and getting out there and doing it. And our dreams have changed. My dream, I had very modest goals when I first started my real estate business, and now, I don't know where we're going to head, but there could be a B in the first, it's in the billions, but maybe, so
yeah, love it.
Dreaming that big is hard to do. And believing in yourself is really the first obstacle you have to overcome. And I think if people can work on that, then maybe their dreams could become, real.
Yeah. Perfect. Love it. Well, that's a great note to end on. And we are unfortunately out of time. Sean, you and I, we need to get on our own call here soon and catch up more. But this has been fantastic. I hope that listeners got a lot out of this, because I think your story is inspiring. I think the way you do things is inspiring and informing. And I hope that there were some really great takeaways for everybody out of this. So thank you, Sean.
Yeah, I hope so too. And I was thinking about coming up mountain biking with you soon too.
Dude, anytime. Let's meet maybe in southern Utah and Moab or somewhere in that area and do some of that.
Yeah, while everybody's trying to figure out what to sell their apartments for, I was going to go mountain biking.
Man, I would love to do that with you. That would be awesome.
Yeah.
Let's make that happen.
Yeah,
all right, everybody. Thank you so
Thanks.
much for listening to another episode of the Apartment Guys podcast, and we'll catch you on the next one. Take care, everybody.
Thanks for listening to The Apartment Guys with Tate Seamer. Tate and friends are grateful to have you as a loyal listener. If you like what you've heard, please subscribe, rate, review, and share with friends on your Apple Podcasts, Google Play, Spotify, or any other podcast platform. Also, check out Tate's YouTube channel for videos of many of these episodes and more. Until next time, take massive action steps and rock on.